Alright, good afternoon everybody. I am live from my Airbnb in Indianapolis, Indiana. First time in the state. And I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is pretty much unchanged here. Didn't do a whole lot today because the market didn't give me a signal to do a whole lot today. Let's talk about it. So how did we close? We closed down. Today feels like an absolute and utter bloodbath. You look at the SPYs, we're down 0.36%. You look at the daily candle on the SPYs, you're going to see it's not too bad. The Qs, the NASDAQ, it's where a lot of the damage is. Qs down 1.4%, and IWM down 0.7%. So there's our indices here. The IWM at one point was really trying to lead us up, but could not break. So reviewing the game plan from this morning. So at one point this morning, why does it look like my charts are all wacky here? Give me a second. So let's go to the pre-market real quick. At one point this morning, we were set for a pretty nice gap up this morning. I was actually pretty optimistic pre-market. But by the time I was doing the morning meeting, I was much less optimistic. But when I was doing my initial research, I was like, okay, inside day and up. We closed at highs on Friday. We're gapping up here a little bit. Let's see how the market can handle this gap up. And as long as we can hold above yesterday's high, then we could be in a position to try to make a go of last week's high, that high from a couple of days ago on Thursday last week / that 390 area. Maybe we can kind of go for it a little bit. That's what I was thinking early in the morning when I was doing my research. And then we just really started kind of rolling down. It was led by Tesla. Tesla also at one point this morning was set to actually gap up. That was before I woke up. By the time I woke up, it was red and really starting to break down. It was leading this market lower. The market now was breaking down. Then at 8:30, we took another big leg down. And by the time we were starting to do the morning meeting, the market had gone back to flat. And I hate flat opens. It doesn't give me an advantage with the gap. The Qs were negative at that point. The IWM was relatively strong, slightly positive, but also had rolled down really hard. And I was like, well, I'm not as optimistic as I was because we are in a bearish market. We had an inside days across the board on Friday. Inside day for the SPYs, inside day for the Qs, inside day for the IWM. This SPY tail on my chart for some reason from Friday is not accurate. That never actually occurred. But it's inside days still kind of across the board. So the game plan today was relatively simple. If we could be above yesterday's high, if the market's proving that it can be above yesterday's high, then you can look to try to be a little bit bullish. If it can't be above the inside day high, you got no business being bullish because everything about this market is bearish. We're trending down pretty much, or at a minimum, not in an uptrend on every single time frame. Market is no longer extended. So some of the things that we were looking for, where we were able to kind of articulate and capture this bounce here, like on the 20th into the 21st, that downside extension, short-term tactical in the green. You didn't have any of that. You didn't have short-term tactical in the green. You don't have daily chart extension. You got downtrends in every time frame. If we're above the inside day high, okay, fine. Combine that with some seasonality. Maybe you can get a decent little bounce that starts today and lasts through this shortened week a little bit. But if we're not above that inside day high, if we're within Friday's range, you're better off being cautious to being bearish. And if we're below yesterday's low, then you're definitely going to be better off being bearish, because that would then just be an inside day continuation pattern of what has been a really bearish market. So that was the thought process and the game plan coming into today. At one point we were set to gap up. It had me optimistic, but by the time this market opened, look at the first 5-minute bar. It was shot. So then it was like, okay, if we can't negate this first 5-minute bar, which would also, basically coincides with Friday's high, that inside day high, you got no real reason doing any buying. Now, when I say that, and when I look at a market that's bearish, I will still look for those extension trades to the downside, which is what we were looking for at lows. You know, it's like this first 5-minute bar is telling me either do nothing or find some shorts. Then you get some continuation, then you get an inside 5 and down. That inside 5 and down is technically shortable. We start getting pretty extended into 380 by this 945 bar, where it's like, okay, you know, we're due by 945 when you sell off from 383 straight down to 380, you can begin to look for an oversold bounce. And it was anemic. That's my word of 2022 in so many ways, right? We couldn't really get going. This inside day never really broke up. You know, I guess you had a little bit of relative strength from the IWM. The big sign, and Pat was super on point with this, was when we broke that low at 10 a.m. and created, well, first of all, as we broke that low, we were getting no VIX confirmation, and the VVIX, I think, was making lows like at the same time. So Pat was letting us know that there was a potential bullish divergence with the VIX. And you get that volume that comes in, you get a second hammer here, you get the VIX divergence. That's a signal, again, where you can look for that oversold extension bounce back trade. And that's really all it is. The degree of the bounce totally exceeds my expectations. You can't look for and expect the market to V-bottom in 180 like that. But yet that's what we did. We V-bottomed, we 180'd off that VIX divergence and this hammer that's on higher volume here. Next thing I know, within 15 minutes, we're retesting that same opening high. We're retesting the inside day from Friday, that high, set up to potentially break it again. And I'm like, holy smokes, I can't believe we just turned around like that. Maybe this is just some sort of opening shakeout where they're shaking out market participants to still set us up for that Santa rally. At the same time, you know, we had called for like a bunch of good longs kind of near bottoms there, like Apple held the support zone. There was a few others. You know, we V-bottom, we work our way back to highs. This is into highs is where I called for profit taking, just because the move was so fast. In the same way that this $3 of downside, $3+ of downside in 30 minutes, really in 15 minutes off the open, was kind of surprising and dramatic by the degree and the speed of the move. It was the exact same thing on the upside. You got 3 5-minute bars here, and it's a $3 upside move. There's no news, there's no nothing. This is just a volatile market environment on low liquidity, brings us all the way back up. But guess what? That has us now extended to the upside. So if you still got any longs here from those lows, book some profit. And now let's see what happens. What I was calling for when this bar occurred was I would love to just get some time correction up here. I kept calling this the prove yourself moment for the market. If the market could just prove itself, go sideways, give a little bit of a higher low, and then break out, only at that point can I start actually thinking this market could be bullish and could go. So what happens? Again, inside 5, the inside 5 breaks down, but it's just a deeper price correction right to the 80 MA that actually gives a continuation hammer. We're still very tight here. This another inside 5. The inside 5 begins to break up. I think this is when I think at 10:40 I was getting off the radio and I said the market needs to break highs and go within the next 10 minutes or it becomes a problem. And that was the important spot. Getting above this like 383 on the upside was key, and above there you can become bullish. And the other thing I mentioned was if we lose the 1030 low, if we lose this higher low, this little, you know, quick price correction into equilibrium, if we lose that low, then the market's probably shot for the day. And that doesn't necessarily mean downtrending all day. It just means that probably nothing's going to happen. So what happens? They fake us out a little bit. We actually break this inside 5 to the upside. After this continuation hammer, we clear 380. We break Friday's high by a couple of pennies. Notably, the IWM never really fully cleared that. It might have done it by 1 penny. Obviously, the Qs were relatively weak, but the Qs were actually creating this reversal pattern in here. So very, very briefly at 10:45 on this candle, it seemed like maybe the market was giving the okay sign. 10 minutes later, it's done. 10 minutes later, it's a false breakout. The market fails. We're getting below the low of the 1030 bar. Once we got below the low of the 1030 bar, my day was pretty much over. So by 11 a.m. there, when we broke that low, my day was pretty much over. I do remember seeing this pivot come in at 11:05 and being like, all right, well, this pivot was a little bit deeper than I wanted, but you know, again, volatile market environment, low liquidity. Maybe this is a deeper pivot than I want. Maybe it can still get us to go. But really, honestly, for the most part, my day was done once we broke this 1030 low. I just had no signal anymore to try. You know, we had the, whereas, like I said in the morning meeting, we don't really want to be looking for longs at all if we're below SPY 383. We had the VIX divergence, we had the extension, we had some things to try to bite onto for, you know, counter trend setups at lows just because of how fast the moves were. And, you know, that was like a decent trade there. But once this broke, you combine that with time of day, this post 11 a.m. time of day, it tends to be trash. There was just nothing really to do here for me for the entire rest of the day, to be honest with you guys. I played around, nibbled with a couple things here or there, but I really didn't do anything for the rest of the day. And the market didn't do anything for the rest of the day. The market was pretty trash. The IWM and the Qs weakened out. The IWM, which I loved that this was leading us up. I loved that the IWM at 10 a.m. did not break its low when the SPYs and the Qs did. That's an extra added layer of probability for me on this long bounce. But the IWM, once broke this 10:30 a.m. low, this really weakened out compared to the SPYs. And the Qs were trashy and weak all day. I mean, they did give us this reversal signal, which ended up being a false signal. That failed, that broke its 10:30 low. And then, you know, the Qs remained pretty weak and pretty garbage for the rest of the day. And there just wasn't anything really to do, I think, once we broke that 10:30 a.m. low. Here we are at the end of the day. Are the Qs? They're not an inside day. Yeah, they broke the previous day's low. Then the Nasdaq looks terrible, to be honest. It's a little bit extended to the downside, but it looks terrible. SPYs are really not too bad. They're almost 2 inside days in a row, but they're not because we actually broke the inside day by a few pennies at one point today. And the Russell here is also not an inside day by a little bit. So Russell's not the end of the world. SPY's not the end of the world. Qs look terrible, but how much of that has to do with Tesla? Tesla was the, I don't know. This is the canary in the coal mine, I guess. Look, I mean, I just keep repeating myself over and over and over again, but this market continues to go down and down and down for Tesla. I don't like the company. I think that it's overvalued, even still at $108. Show me this thing at 60, and maybe I'm gonna start looking at an appropriate price from like more of a valuation perspective in my mind for Tesla. Thanks for that stat there. Mark saying Tesla's 4.996% of the Qs. I would wonder, actually, would be curious to know on a timestamp basis if that's at the end of the day or not, because that yeah, exactly, that keeps, I'm sure that number has been sliding throughout this month. The Tesla selling here is getting incredible from a technical perspective. Forget about my fundamental thought process for a minute. The selling in this Tesla is becoming absolutely incredible. And 60 puts trading at 35 cents. Yeah. Yeah, the Tesla selling here is really dramatic. I mean, look, I couldn't have been more bearish on this thing. Didn't make a penny on it on the way down. Lost a bunch of money shorting it at certain points over the course of the last few years. We said it here first. The thing with Twitter could destroy Tesla. That, you know, if you're a Tesla shareholder, you shouldn't be more pissed about anything than what's going on with Twitter. If the board of directors of Tesla were ever going to stand up and say something, they should have said it right away when Elon was first chatting about doing anything with Twitter. I mean, this Tesla's terrible on so many, from such a, you know, again, the qualitative fundamental thought process, the actual fundamental thought process, but just from a trading perspective, the way this thing is selling, you can't continue to sell like this. I mean, I struggle to really take a stand on Tesla to the long side because I just don't believe in it. It's part of my thought. Like, if I really, and it's probably a good thing that I don't believe in it, to be honest. Because if I believed in Tesla, I probably would be fighting this thing. I probably would be in from $135 and thinking that, you know, $135, that was like day 7 or 8 to the downside, and I'd be trying to fight this thing intraday and stuff like that and getting my face ripped off. But I just don't believe in the company, so I haven't fought it. With that said, I'm still looking for bounce trades to come into this thing just from a technical perspective. You got the stock trading at 108, the ADMA is at 133, the stock was at, on December 1st, the stock was at $200 basically, and now it's at 108 bucks. The speed of the selling is increasing on the way down. The volume is increasing. Everything is saying that this thing is due for an oversold bounce. But I'll tell you, the flip side of it is the selling in this thing is non-stop. The only good trade in this thing was off the open. We talked about 117.16 pre-market as a buy. And if you bought that 117.16 right off the open versus the opening low or versus that pre-market low of 116.20 that we talked about, there was a great bounce that lasted an entire 5 minutes in the stock, but it brought it up almost to 120. More than enough to get your risk covered at a minimum, sell some more in front of 120, and then get stopped out of it. And then after that, there was just really no signal here to do anything. I mean, got down here, you know, maybe you're trying this low at 945 because of the volume increase for a little bit of a bounce. That turns into a bearish consolidation. It just continues down. The crazy thing that I noted was just like the algorithmic selling that's coming into this that's institutionally based is just insane. Someone's continuing to dump and dump and dump and dump and dump, and at a certain point here, that's a combination of, I think, real selling and forced selling. There are absolutely margin calls that are going off because of the way that this Tesla is selling, and probably at very high levels. And I honestly think, as much as I would love for Tesla to be selling off in a vacuum, I think Tesla's holding down the entire stock market. It's holding down the entire NASDAQ. There's no doubt in my mind that Tesla margin calls are forcing people to raise funds by selling other areas of the equity market. There's no doubt in my mind about it. And, you know, that optimism that I had when I first woke up this morning and the market was gapping up was erased when the market filled its gap. But the real reason I still think why the market filled its gap was because Tesla started getting obliterated and going negative first. And it was just pulling everything down with it. And at certain points of the day today, it looked like certain stocks might try to make a stand, and then you just couldn't get that upside follow-through because the Tesla selling was so bad. And, I mean, is Elon getting margin calls at this point? Is he raising money? I would love to know what's really going on behind the scenes there. Something's happening, for sure. Something's happening. Yeah, it's pretty bonkers. We still had some great trades today. We get so fascinated, at least I do, by Tesla and by tech just because it's like exciting. But, you know, it's XLE. We talked about long XLE versus like 87 to 87 quarter, or any of the stocks that are also any of the stocks that are also getting above those levels. So you had XLE as a trade. You had ExxonMobil as a trade. You had Apache as a trade. I guess Apache wasn't as good. You had Oxy, one of you guys mentioned long verse 64 off the open. You had all that stuff kind of working out really well. I hope some people caught it because we did talk about it, but we do tend to get very focused on where the excitement was. Netflix actually gave a great short. We talked about a lot of these inside days from Friday as potential two-way trades if they break. Netflix basically broke immediately, so that was actually a pretty good short if anybody caught that through yesterday's low, and then good spot to book profit right at lows when the bullish option flow kind of came in. So yes, this is recorded on. You can watch it on my YouTube channel, which I'll give you a link to super quick here. Give you a quick link so that I can give a plug for my YouTube channel, where if you miss any afternoon meeting, you can capture it right here. Make sure you give it a subscribe because I'm really trying to build this thing up a little bit. So I appreciate you guys when you subscribe and you hit the thumbs up and all that stuff. Really focused on building it out. But yeah, so Netflix gave a decent short. We called the profit covering, or the spot to book profit into the downside extension here. So that was pretty good. So I mean, look, there was some stuff out there on the bounce trade, by the way, when we were looking for the market to bounce back up. I had a list of stocks that I was communicating that were, I thought, holding in better to buy through their intraday resistance levels. Again, we're only looking to buy these things on the way up a lot of the times. I was talking about Snap through $8.40. That cleared up at 10 a.m. That led to, you know, a pretty decent trade here on what was otherwise a tricky market. Talked about this S on the break of 1290. This was actually a tricky trade because it broke 1290. It might have suckered people in and then came back down pretty hard. If you were trying to use a tighter stop, you might have gotten pushed out at this 1010 bar, but the low still held, and then that trade kind of worked. I was looking at Shopify. I called out through 3270 as a trade. Same thing. If this is a bearish consolidation, why do I like the idea of going long a bearish consolidation? Well, generally I don't. But what you got to recognize is that this bearish consolidation is actually representing relative strength because you've got the market continuing to crack. Remember, the SPYs, the Qs, 10 a.m. What are they doing on the SPYs and Qs at 10 a.m.? Bam, new lows are coming in. New lows are coming in. But Snap, S, Shop, those names that I was calling out for trades, they were showing relative strength actually, even though it's a bearish consolidation pattern, technically a bearish pattern. And this, by the way, guys, not to get off topic, this is where, you know, understanding how dynamic the market is and understanding layers of probability and understanding that you need to compare relative strength with the stocks that you're looking at in the market and sectors and things like that, that's so important. That's what makes trading chess, not checkers. Because if you're playing checkers, Shopify is a short here. If you're playing chess, you're recognizing the relative strength that's coming in, and you're recognizing that if it can break up, because we want to think about the market in terms of if-then statements, if it can break up through 3270, through the resistance zone of this bearish consolidation, then that relative strength coupled with a market bounce could lead to profitability. So those trades all worked, but they're not necessarily the easy layup trades either. But we were able to recognize them, we were able to communicate them. So, you know, again, on what I would describe here at the end of the day as a very disappointing day, and the reason why I'm disappointed, I was like starting to get excited when I was looking at this bullish consolidation coming into the SPYs in front of the inside day high, in front of this resistance area. If this thing could break out, I really thought if we could get above and hold above this 383, that the entire market could start to catch an underlying bid and really give continuation. It didn't, it failed. The rest of the day turned into being like a waste of time to kind of do anything. But even on a day like today, with this really tricky price action, we called out still a whole ton of winners. And I think that's just a fantastic job by the team. You can't do any better than that. But this Tesla is really becoming a problem because I think that it is holding down everything else at this point, to be honest. But we'll see how that plays out. I mean, this thing is going to have to give some sort of relief bounce eventually at some point. Who knows where, though? $100? $95? Maybe they just gap it up eventually one day and like really don't let anybody in on the other side of the trade. Somebody made an important point. I think it might have been Mark pre-market talking about how just at this point everybody and their mother is looking for the reversal to come in on Tesla to jump in and take advantage of it, and maybe they don't make it that easy. But I would just stick with the same thought process here. Only buy this thing, like any of these beaten up stocks, only buy these things on the way up. Let the pattern come to you. Let Tesla show you that heavy volume capitulation buy setup. Let Tesla show you a reversal pattern that you can come in and buy. If Tesla's going to give a V bottom intraday, maybe, you know, buy it on the right side of the V, right? Buy it on the way up. Or, you know, look for the RDR trade, right? That's what I wrote in the note this morning, right? Tesla, RDR. We can still be looking for that trade back through the previous day's low. How much money did anybody lose on an RDR in Tesla today by going long for an RDR? $0. Why? Because it never triggered. Don't catch a falling knife in these things. Let the trade come to you. Because while I think technically this thing is very much due for a bounce, and it's like kind of getting crazy here the way that it's selling, we got to remember that a market can remain irrational for longer than anyone can remain solvent. And for me, I still don't even believe in the company at these prices. But will I look for, you know, a trade on the opposite side of things if the setup is actually there? Absolutely, I will. But, you know, buy when the timing is right. Yeah, well, I hope so, Mark. Unless they just gap the thing up one day and don't let anybody, like, they gap this thing up to 113 tomorrow and they don't let anybody in. Elon makes an announcement that he's stepping down from Twitter or something silly, or that he's selling Twitter for pennies on the dollar to focus on Tesla. Then this thing will gap up to 113 and 114. We don't get any stock. But yeah, that's pretty much all I got. Again, some good trades that were out there today. Overall, still I found today to be a little bit frustrating or disappointing. But that's it. I think that the trading environment for the month of December, I honestly, in a lot of ways, think that this December has been like possibly the hardest month of 2022 in a lot of ways. And I know there's been a lot of complaining that I haven't fully agreed with for this calendar year. It certainly hasn't been 2020 or 2021, but there's been so much movement here that there's been stuff to take advantage of always, it seems like. But this December has just been really tricky. But yeah, again, that's all I got. So I'm happy to answer any questions that you guys may have, and any names that you guys want to look at, and then that's pretty much it. We got a shortened holiday week this week, and I'm in Indianapolis, so hoping to see the city a little bit. I've never been here. Slowly knocking off all 50 states. I'm up to 34 now. I got a little app on my phone that tracks it, which is kind of cool. Anyway, let me scroll up in the VTF, see if I missed any questions. Looks like we got a little bit of a lighter crew for the afternoon meeting with the holiday week, which is fine. I'm seeing Mark's comment. I've wondered if funds are positioning themselves for the so-called earnings recession that some are calling for in the first half of 2023. Yeah, I did like a decent amount of research on earnings recessions kind of over the weekend, and it's interesting how earnings recessions don't have a consistent correlation to stock market performance. There have been earnings recessions where the stock market performs terribly. There have been earnings recessions where the stock market doesn't even go into a bear market. It's kind of interesting. The biggest thought process that I've had is that for sure the market's a forward-looking mechanism, and everybody's calling for the first half of 2023 to be awful and terrible and end of the world and everything else. Well, then the market's a forward-looking mechanism. They should be already bringing us down to where those prices are. So I've really had this thought process ever since we saw the Nike and FedEx earnings, that this earnings season could be like the one that we saw a couple quarters ago, where unless we're just seeing like disastrous numbers, if these companies are able to kind of be in line with their expectations, we might see these things rip, and then we don't really see that full degree of 3,200 in the S&P actually play out like some people have been calling for. So it's going to be pretty interesting. What else? Mark thinks that the relief bounce in Tesla will be violent. I would think so too. So I'm no expert on margin selling. So maybe I know Josh and Rock have both provided a lot of information on that in the past. I'm not sure if either of them are still listening for this afternoon meeting on the timings on when the margin selling usually occurs. I feel like I've heard 10:30 and 2:30 are times of forced liquidations or into those numbers, and then it's usually done by that point. So I don't have that information firsthand. That kind of comes from what I've heard Josh and Rock say. So I guess they're not listening to today's afternoon meeting to give us the information, but I just re-ask them tomorrow when they're here in the VTF. From Dave S. Tangent to the Tesla margin call idea you floated. NVIDIA also had a very bearish day versus others like AMD, for example. Is it more of the same? So, I mean, NVIDIA's kind of been on a run overall. like it's still well off these October lows, which are down at $110. So I don't know if NVIDIA itself, obviously this last 2 of the 3 last trading sessions have been super brutal, but I don't know if NVIDIA itself is having any margin calls in it for people who are long it, unless they chased $180 mid-month here. I just wonder, when I'm looking at this degree of selling in NVIDIA, it goes back to what I was saying are the Tesla margin calls creating forced selling by certain funds and other names. And the other thing that we got to keep in mind is that markets work in feedback cycles. So I don't know where like Elon's margin call spot is in Tesla. I don't think anyone really does. I know that there's been a lot of numbers that have been floated. I've heard a lot of numbers get floated. I don't think anyone really actually knows, because I've heard all these different numbers. But if somebody gets a margin call and they're forced to sell Tesla, then somebody else, that brings it lower, and that could get it to the price where someone else has their margin call, which could get it to the price where someone else has their margin call. Markets work in feedback cycles. The understanding that markets work in feedback cycles is one of the most important principles that you can understand in the marketplace. And it's the feedback cycles that create trends. Everyone wants to think that the market is rational, or maybe not everybody, but maybe a bunch of university professors want to think that the market is fully rational. But it's not rational when you look at something like margin selling, when you're forced to liquidate a position that you don't want to liquidate. If you like Tesla at 150, you don't like it at 110, so now you're dumping? It doesn't make any sense. If you like it at 150, you love it at 110. But if you're on margin and the broker or the bank is calling you up and saying, hey buddy, post that cash or liquidate some of that position, well, you're either liquidating that position or you're liquidating a different position to be able to raise the money to try to keep this one. And if you're liquidating this one that's selling again could bring you down to the spot where the next fund is getting its margin call, or where Elon himself is getting the margin call. So that's how feedback cycles work. And I can't tell you who's getting margin called in Tesla, and I can't tell you, if I don't know who that is, I can't tell you what else they own. So maybe they own NVIDIA and not AMD, like your example. So somebody who's getting margin call in Tesla, maybe they're trying to hold that position, they're dumping their NVIDIA position to raise cash to put it towards Tesla. That could certainly be happening. It's pretty wild. It's pretty interesting. And I'm really curious to see what will happen with some of these other equities, like a NVIDIA, or Rock was saying Amazon earlier, if this Tesla can ever actually stabilize. Because you might be getting, again, margins selling in Amazon and NVIDIA because of what's going on in Tesla, and if Tesla can just stop going down, then maybe some of those other names can hold in. And then maybe you get your Santa rally, or maybe the January effect still comes into play. I mean, if you're like a long-only investor or fund manager, not like a real long-short trader like we are, is anybody paying any taxes for the calendar year of 2022? If you're just an investor or a long-only fund manager, are you paying taxes on any of your income anywhere? No, you got losses everywhere. If you're a regular investor and you're paying taxes in the calendar year 2022, you got to get a different accountant. Yeah, I mean, it just doesn't make any sense at all. You got so many things that you could sell just to offset the income from your 9 to 5 or whatever, to make sure that you're not paying anything. So it's going to be really interesting to see, I think, a potential January effect that could come into this market. But again, what is the Santa rally? Everyone talks about Santa rally. The Santa rally is just a front running of the January effect. But maybe that front running of the January effect can't happen because everybody's getting margin called because of what's happening in Tesla. I don't know. I'm just totally speculating here. But this is what I love about markets, right? Is that we can sit here and we can speculate about this stuff, and we can try to figure this puzzle out, and we can try to think about what can happen next. As I see this Tesla coming down to 108, even as we're talking about it, continuing to make new lows. It's disgusting. From DJ, when looking at support resistance levels, do you think that the closing prices are more or less important of a layer of probability than highs? I tend to think that highs and lows are what's more important, not closing prices. tend to. It's probably a little bit situation specific, but I would say just, as a very general question or a very general answer, I would say it's the highs and lows that actually matter. Because that's also where the pivots are, right? That's where the buying started or stopped. It's where the selling started or stopped. That's what makes it important. From Elliot, I started to do my yearly trading review. I've been trading for a year this December. Okay, nice. I see that I am much better going short than long. Okay, I'm the opposite, but specifically in stocks in the $20 to $100 range. With that info, would you suggest me to mainly focus on the short side and not to go long at all, or should I try my best to do both sides of the market? I love that you're doing the analysis, Elliot. That's the right thing to do. The only thing I would say about that, when you're looking at your statistics that are telling you that you're, so everyone can see you when you walk by. You want to say hi to everyone? Ladies and gentlemen, I don't know if you can see her, my lovely wife walking by in the Airbnb that we're at for the week. Anyway, we've been in a bearish year. So it's incredible that you started exactly 1 year ago. So, if your statistics are telling you that you are better off being short than long, absolutely pay attention to those statistics. But the other part that I would add on to that is what degree of those statistics are coming from the calendar year that we just had. Yeah, exactly what Mark just said. So I would not abandon the long side just based on that one kind of year of statistics. But I love that you're doing it, and it is something that's notable and you want to pay attention to. From Zachary, I've realized on a lot of my trades, not today, but the last few months, a lot of my stop outs would have been great trades if I had been about 15 cents under the support bar or dollar level. Do you have any opinion on this? I know a lot of people say if it breaks the dollar level, it will keep going. So I am not a believer in magic numbers, right? I don't think that a whole number, I don't think that $70 is inherently any more important than $70 and 17 cents. Right? I think that what's important is that it's actually a true support or resistance level, that it's a spot where you have seen consistently buyers take control from sellers, sellers take control from buyers, that it's shown that it's created that wall. So a lot of times when you're looking at a support or resistance zone, it's a range. And I do sometimes try to narrow that range down to a whole number, but the reason I do that is more because of the liquidity that tends to cluster at whole numbers than the fact that it's actually a whole number. Otherwise, I prefer to use the low end of support range and the high end of a resistance range, and it only is really breaking out or breaking down if it breaks that point, if that makes sense. So I think that I don't like the idea of, if the real support truly is $70, then I don't like the idea of using $69.85 as the stop loss. It's random. Doesn't make any sense. I would also say that, when you're looking at, so I don't think it makes sense anymore. There was a time when this worked, and it doesn't work anymore, where, let's say that your support level is $70. So there was a time in my career, if support was $70, I would buy on the way down to 70. I would start buying, I'd buy 70 quarter, 70 20, 70 15, 70 10, 70 05. And 70 would hold by 3 cents, and the trade would bounce, and I would get paid on it. The market really doesn't work that way anymore. You want to recognize that $70 is your support level, but you want to be buying it on the way up. And a lot of times we see that shakeout trade, where 70 is that level, it breaks it, and then snaps back through 70. We do see that. But if you look at Apple today, Apple held 129 perfectly today. If you were just building in versus 129, actually no, it didn't. I'm totally wrong on what I just said. It went to 128.72. Totally wrong on it. But okay, then this is actually a case in point. If you're looking at 129 as a support level, this is exactly what I'm saying we can't do anymore. You used to be able to do this years ago. Apple's coming down. You start buying it at 129 quarter, 129.20, 129.15. It holds 129. You get your bounce. It just doesn't happen that way. So often, if 129 is the level, you get this. 129, as far as I'm concerned, held today. We looked at the 129 level in the morning meeting as a spot we could pay attention to. As far as I'm concerned, 129 held today, but it ticked to as low as 128.72. So anybody who was doing what I just described and had their stop loss like what you're describing at 128.99, all got shaken out. But look, if you gave it 15 cents, you would have sold the absolute low. So the point is, pay attention to the level, but don't just buy on the way down or short on the way up into the level. But we want to be going long, even if we're going long counter trend, meaning the stock's breaking down and you're looking to go long, you still need to buy on the way up. That was the point I was trying to get across with Tesla. Buy Tesla on the way up. If you bought the open, fine. If you tried it here because it was on the way up, fine. But you only can buy these things on the way up. Your probability of success is just so bad these days, and it's so hard to know exactly where the stop loss should be, even if it's a big daily support level if you're buying it on the way down. But if you waited for Apple to get to 129, which is a massive level, have its highest volume bar of the day, create a tail where it's super extended, and then give you an inside 5 and up, you had multiple opportunities to be able to buy Apple on the way up. You could have bought it right back through 129 versus lows. You could have bought it after this candle closed because of the volume, because of the tail with the stop loss at lows. You could have been patient. You saw the inside 5 come in. You're buying on the way up when the inside 5 breaks to the upside looking for a retracement trade. Any of those trades works. What doesn't work is just buying on the way down and having a stop loss. What also doesn't work is having a random 15 cents. Watch it, buy it on the way up, use the stop loss that's actually the low point. Do you use a level 2 to help pick a stop loss, a support, resistance as a range? Not really. I use the level 2. I used to do that. I don't really anymore. There's so much noise in it. I use the level 2 to identify liquidity points in the market to help limit slippage. I use the level 2 a lot if stock is circuit broken because I can read the short sellers in it. I use the level 2 in news. I use the level 2 in an IPO. I use the level 2 if I'm trading after hours. But I don't really choose my stops off of it. I'm choosing my stops off charts. Unless it's a special circumstance like I'm trading an earnings report after hours. Used to there's years where I'd be like, I don't need charts, just give me the tape. It's changed. All right, guys, approaching 5 o'clock. I'm gonna wrap things up. Hope everybody was able to have a decent day today, even if the market was disappointing. Holiday week this week, so try to make sure you have some fun with your family and friends as we approach New Year's. But we'll be here, so see you all tomorrow morning. Have a great night.